Hi, everybody. Here's some great analysis of the Phoenix real estate market from Tom Ruff over at Harmless, the local MLS. Looking at the median sale price, he's got it for December is 412, and last December was 427, so it's down 3.1% from a year ago. The median sold price. And this includes all style of home, not just single family. And he looks at the houses that are under contract now in mid-January to estimate what the sale prices will be for January, the median sale price. And it's actually going down a little bit, $2,000. That's unusual because usually in January they go up, but it's a small amount. And then when he's looking at the average price, that's actually went up a little bit. So in my mind, if the prices had go down or they go down in February, that's a super bad sign because typically prices do go up in January and February, and they tend to go up for the first 6 months of the year, and then it's weaker the next six. So just the normal seasonality of the Phoenix real estate market. And then there's this long commentary from Tom where he really goes into it. He looks at the last year, month by month, really a great analysis of what happened last year and guessing what's going to happen next year or this year. He shows that total home sales was 82,000 last year. That was a huge drop, even though the market was pretty hot the first half, first quarter. And you can see that how it compares to others is just looking at the total number of homes sold. Just looking at sales for the fourth quarter of last year, 15,000. There's only 1 year, which was 2007, which had lower sales. No, and also 2001. And this is looking at new home sales. You can see the number completed actually went down in 2021 and 2022 despite prices skyrocketing. That's not the way economics is supposed to work. When prices go up that high, the supply is supposed to increase. But there was other factors going on in here, and like supply chain stuff. And we should see a bounce back maybe in 2023 where you get some of the delays we got from the supply chain stuff will show up in production in 2023. But nevertheless, despite prices skyrocketing, the number of completed new homes sold went down. That's not the way economics is supposed to work. There's a ton of great stuff on this. This is one thing included foreclosures. Obviously, foreclosures are tiny now, but look how high they were. They were like almost 50,000 in 2010. So part of the scars that I have from the past bubble is this kind of stuff. Think of that, 50,000 almost in a year foreclosures. What did that do to all those families? Holy mackerel. That's not going to happen this time, but nevertheless, we, in fact, because it started happening, the government would step in and take matters into their own hands to stop it. And the other thing about these, how many of these were Fannie and Freddie foreclosures? I don't think you're going to get a government-controlled agency foreclosing like this in the future. Okay, here's Tom's quote. It's all about the mortgage rates. And the same thing, he's got some great quotes here from Sam Cater of Freddie Mac, Mark Fleming, First American, and local Michael Orr of the Cromford Report. And a lot of them are just keen on mortgage rates, of course. But anyway, they're great. Check it all out. Read it. Great stuff. My thing is price expectations. I think people ignore that. And the fact that price has been falling since May changes the dynamics. Yeah, super important is going to be the mortgage rates. But the fact that the people are getting ingrained into prices falling changes the whole game. Well, the first few months are going to be interesting. Are we going to see a bounce in inventory? Or right now we're kind of really low number of homes hitting the market and really low number of sales. Are we going to see more homes hitting the market? That would change the balance terrifically. Or are rates going to go down and that'll increase demand some? And so that would and hopefully stop the price falls. Great. Leave it in comments if you have any. I appreciate it. Take care.